Hello everyone. I welcome the management for the 4Q FY18 post-conference call. And the management is being represented by Mr. G.R.K. Prasad, Executive Director, Mr. T. Hari Babu, CFO, Mr. P.J.V. Sharma, Director, Nava Bharat Projects Limited, Mr. M.N. Rao, VP Finance, Mr. V.S.N. Raju, Company Secretary. I hand over back to the management now.
Thank you, Abneet. Good morning, everybody. I trust you have had a look at our Q4 and FY18 financial results. Both the statement of financial results and the company's press release have been filed with the stock exchanges as well as posted on our website. I would like to give a snapshot of operations and projects to supplement the information already available on public domain. I would like to start with domestic operations. Ferroalloys. Company had a robust manganese alloy business riding on demand from China and Japan and domestic steel companies. Turned out record production and sales quantum since the inception of the company. Though the manganese alloy prices have corrected in the current financial year, a downward trend of manganese ore prices from Q2 of FY 2019 should help sustain healthy margins. The power business. Captive consumption of power at grid tariff rates being the transfer price gave rise to sustained profitability in power business. But in merchant power rates in Q4 also helped in dispatch of higher quantum of power and increased PLFs on an average. Power plants, including the 150 megawatt power plant of NBVENTURES, had a one-off benefit of compensation for lower offtakes paid by the Telangana discoms against previous contracts and captured in Q4 of FY 2018. On the sugar business suffered on account of fall in prices much below the cost of production. The company made inventory valuation of the closing stock reflecting the prevailing price trends. The company has a separate revenue stream through O&M services. On that, the company's Singapore subsidiary is entrusted with O&M services of the 300 megawatt power plant in Zambia. The company renders technical support to the Singapore subsidiary and obtains a fees captured in standalone financials and forming part of the operational income. I would now like to dwell on international operations, starting with Mamba Collieries Limited, Zambia. MCL has been billing for full availability of the 300 megawatt power plant since January 2018 post the mini overhaul and injecting power as scheduled by the local utility. Similarly, the coal mining operations of MCL have been optimal, catering to full requirement of the power plant as well as for sale of high-grade coal. MCL has already opened up new coal pits to provide for fuel requirement of the power plant at full load in future as well as for sale of high-grade coal to the extent required. MCL made an income of $129.27 million, including an MTM gain of $2.12 million on IRS hedges for the financial year 2018, starting from August 2017 for power operations. MCL made a profit after tax, including deferred tax of $2.79 million of $17.84 million for the financial year 2018. The government of Zambia had provided a sovereign guarantee against the utilities' payment obligations to MCL and paid lump sum amounts to demonstrate their commitment. As such, the receivables from JESCO to MCL are fully secured, although they've been delayed and stand at $81 million as of 31st March 2018. It is noteworthy that the Zambian company does get part payments from JESCO on a monthly basis under an escrow arrangement, which are sufficient for all operational needs. The tariff rationalization of JESCO took much longer time, involving a consultative approach with all mining companies, and so the payment delays to MCL occurred temporarily. While the copper sector is booming, and so high power demand continues in Zambia and surrounding regions. MCL, it's also noteworthy to say that MCL commenced repayment of long-term debt even before commercial operations of the power plant from August 2017, with 3 installments having been paid on time, and the loans currently stand at $500 million as of 31st March 2018. Now coming to the Zambian sugar project, which is under development, which is being developed by Kawamba Sugar Limited. KSL obtained leasehold rights from Zambian government on 10,000 hectares of land for setting up the 5,000 TCD sugar project in phases. Initial development work comprises environmental impact assessment study and detailed project feasibility report, pilot seedling project, site clearing, etc., scheduled till March 2019. Base project cost, excluding sugar estate development, pre-operative consultancy and financing cost, is very well comparable and competitive to region-specific projects of similar size. Initial surveys conducted by the company indicate that sugar and allied products like alcohol have high prospects in Zambia and neighboring countries. However, the key trigger for investment commitment is full tie-up of for debt and equity expected by early 2019. Coming back to the healthcare-enabled services undertaken by the company's step-down subsidiary, starting in Singapore and in APAC region in general. The initial foray is for establishing presence in Singapore and Malaysia. The step-down subsidiary has obtained exclusive distribution rights for the formulation in Malaysia from a leading MNC, being the market leader. The investment comprises initial investment, that is, comprises creating market awareness and development over 2 years with minimal capital outlay. We expect that this would provide us the entry point into other healthcare-enabled services and allied products without the overhang of manufacturing. Now we are open for questions and answers.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vinod Malviya from Florent Tree Advisors. Please go ahead.
Good morning, sir.
Good morning.
Mr. Malviya, you're not audible, sir. Your audio is breaking. May I request you to use a handset, please?
Hello. Is it better now?
Yes,
please.
Yeah. So can you help me with the Qtr4 Zambia numbers?
Sorry?
Can you help me with the Qtr4 revenue, EBITDA and PAT number for Zambia operations?
I actually set out the revenue number for Zambia. More or less it is from, for the quarter. But for a quarter, actually, let me tell you the 1 second, please. Yeah. For the quarter, the income is 59.77 million.
Okay.
And the profit after tax is 15.327 million, excluding the MTM gain, which is about 2.12 million.
Okay. So this 15 million is the normal quarterly run rate which should we see for the full year of FY19, right?
That's right.
Yeah. The second question, was on the one-off, you talked about you received some past dues for under your subsidiary. So what was the quantum for that under the Nava Bharat Energy?
It was received both in the parent company, which is Nava Bharat Ventures, and as well as Nava Bharat Energy.
Okay.
In Nava Bharat Ventures, the amount is about 37 crores, and in Energy, it's about 25 crores.
Sorry, Energy, how much is it?
25 crores.
Okay, and this is shown as part of your revenue in this quarter.
That's right.
Okay, right. And sir, what is your outlook on the, let's say, for FY19 in terms of your PPAs for the domestic operations?
Well, as far as power is concerned, we are fully secured in the sense that captive power is driving the operations now, and we are set to produce like quantum, if not more, for ferroalloys, both manganese as well as chrome. And on top of it, whatever surplus power also, we expect will get dispatched in the coming months, given the current firmness in the merchant price that's been seen of late.
Okay, so we should operate at least like 80-85% PLF should be the normal PLF which you should be able to operate at, right? For FY19?
We're targeting 80%, yes.
Okay. Okay, that's all from my side. Thank you.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Good morning, sir. And
good morning.
Congratulations on good set of numbers. So my first question pertains to Nava Energy India Limited. Is it possible to share the revenue, EBITDA and PAT for the entire year?
Which company?
Energy.
For Nava Energy?
Well, the revenues for energy are 291.48 crores for 2017-18, and profit after tax is 2.71 crores. That is it's actually loss. Yeah, sorry, 2.71 crores.
So 2.7 crore for the entire year, and this includes the 25 crore of penalty which you received.
Yes, right? After accounting for 25 crores of penalty.
And sir, how is sir, have you tied up for power for FY19 from this particular power plant? What is the status?
Well, there is no contract currently. Whatever is happening is through IEX, which is, of course, on a slightly better rate than the other contract which we had last year. And we expect some limited period tenders to come up from the local distribution companies shortly, where we should be able to participate and get into a contract till at least March 2019.
Sir, I missed out on the revenue and the PAT revenue number for the Zambia for the entire FY18. Is it possible to share that number?
FY18 revenue number I gave, right?
Sorry, I missed out, sir. Sorry. Is it USD 129 million?
127 million for revenue side, and profit of tax is actually including MTM gain is 17.84. MTM gain is 2.12 million.
The revenue is 129 million. Am I correct?
That's right, 129.27.
Okay, sir.
You should remember that the revenue comprises the power operations from August 2017, and again we have had some mini overhaul of power plants till December. So really speaking, the full revenue, based on availability, has been captured from January 2018. So that's why the quarterly numbers make a lot of difference.
So can we expect this profit, this quarterly rate of $15.3 million which received in Q4 FY18 to increase given the fact that our debt has decreased over last year?
Yeah. So, well, the debt is on an equal basis. The $15 million profit is based on, full availability factor for the first, last 3 months of the financial year. We expect the reduction in debt to help us in to some extent going forward. That's why we said 15 million number seems reasonable per quarter.
Okay. Thank you, sir. That's it.
Thank you. With the next question from the line of Amit Kolcha from HDFC Mutual Fund. Please go ahead.
Good morning, sir. Sir, if I look at this quarter's numbers, your consolidated profits attributed to you is about 173 crores.
Yeah.
And the one-time item, which is the one-off compensation, if we remove that, then it is about 140 crores broadly. So, is there any other one-off in this number, or this is the recurring number?
Can you just repeat the number?
140 crores, sir. If I look at the total number is about 173, and you mentioned that you got about 62 crores of compensation. So adjusted for the tax, it should be somewhere about 45 crores of one-time income.
No, you are talking about consolidated numbers. I think this seems
consolidated numbers, sir. Yes.
Consolidated numbers. That profit is about 278 crores.
No, I am talking about quarterly numbers, sir.
Oh, okay. Okay.
So 173, because I would suppose that this quarter's run rate is the best run rate to look at because you had full operations of Zambia.
Mm-hmm.
So 173 crores of attributable profit to you.
Right.
Minus about 45 crores of one time. So I wanted to understand, is there any other one-off in the balance profit, or the balance profit is the recurring profit as per the current situation?
Well, accepting the 2.2 million MTM gain, which it's a interest rate hedge, which is also captured as of the year end in Zambian operations.
Okay.
Other than that, nothing else.
Okay. And secondly, sir, this Zambian money, cash flows, are they being used today to repay debt or any other investments you've made already into the other businesses which you are pursuing?
They are predominantly for debt repayment and other corporate needs in Indian operations. See, the other investments that we are talking about are in very nascent stage, like the development of the agriculture project sugar project in Zambia, as well as the healthcare enabled services. They require very little cash infusion, maximum about $2 million over a period of 1 year.
And the sugar business which you are pursuing in Zambia, that will require what kind of capex?
Let me clarify. We are at the early phase now. We have not decided on the investment commitment. The initial work comprise several things like getting the various clearances and getting the site ready and have some pilot plan study, then market study being done, and the most important thing is having the tie-ups for both finance and equity. So at this point of time, the investment is at a very early stage. I would say the capital expenditure program is limited to max about $1 million this year.
Okay. And sir, what is the debt repayment schedule for FY19 in Zambia?
It's actually each half year, it's about $30 million. So about $60 million will get repaid.
Okay. And that is, and what is the depreciation amount which you are charging in the accounts today? Is that similar to the debt repayment number?
well, it is about the same.
Okay, so essentially you'll be making a net cash flow of something like $10-12 million per quarter. So we wanted to understand the use of this cash flow. What is the plan to use this?
You're talking about Indian cash flows?
No, Zambian cash flow.
Well, Zambian, we can always look at getting the money back. So what our efforts are currently is, to have this debt repayment going on, meet the operational needs, and strive for what is called a critical financial completion date, which is where distribution of profits would happen. So
why I am trying to understand this is, sir, that your depreciation will take care of broadly your debt repayment in Zambia.
See, there are certain covenants in terms of which we need to have, the payment performance of the local utility being regular for a period of 1 year since the commencement. So for us, although cash gets accrued and while delays have been there, while the cash gets accrued, the actual distribution of cash will happen only upon this financial completion date, which is expected early 2019.
Okay. And sir, last question on Zambia.
And there is no capital. The money is not intended for any capital expenditure plan.
So ultimately it will come back to India?
That's right.
And if you bring it to India, what is the tax implications?
They will be taxed as regular, it will be coming through as a dividend from Singapore company, and will be subject to normal tax here.
So, sir, can you, so it will be coming from Zambia to Singapore and Singapore to India?
Correct.
So what are the tax implications at different stages?
Zambia to Singapore, no tax implications. Excepting there is a withholding tax which is borne by the Zambian company, and Singapore doesn't suffer any tax on this dividend. From Singapore to India, it will be subjected to normal Indian tax.
And if we look at, sir, the Indian power operations, so in case of Nava Bharat Energy, you mentioned that you don't have any offtake contracts for next year. Given that it is a IPP, not linked to captive, how are you getting the fuel in that?
We are getting the fuel through e-auction. There is actually 3 types of fuel that we've been using in that company. But it's a good question you raised. You see, the company has evolved in terms of fuel usage, whereby the blended fuel cost is very much comparable to what is obtained for fuel of similarly sized plants on linkage basis. So they use a mix of e-auction coal and resid and slurry.
And what is the fuel cost, sir?
Well, the cost is something which we cannot divulge on this call, because that is something which we thought we would leave outside the call.
Mr. Kocha, may I request you to join the question queue for any follow-ups, as we have several participants waiting for their turn. Thank you. The next question is on the line of B.V. Bajaj from Bajaj Shares and Securities. Please go ahead.
Yeah. Good morning.
Good morning.
Management for excellent top line, which is 66% up on consolidated, including the profit, which has gone by almost 430% consolidated. And my first question, I have 2 questions. My first question is, as the capital work which was undertaken earlier years, around 4,000 crore, almost over, that is Zambia power plant only, and revenue has started coming from the first quarter of FY18. So there, any more capex is there in that power plant, and how you are projecting the complete financial year for that 18-19 in our financial term, outlook on that profitability? Because this consolidated in FY18 also is 50% is from the power sector. Please, outlook on that, sir.
Okay. One more question, you said?
Yeah. Other question is regarding the emerging business, that SPV in Singapore healthcare. How far it has reached, and what is that marketing arrangements with that company for marketing in Malaysia and Indonesia? Just throw some light on that, sir.
Sure. Thank you very much for your compliments first. And in terms of the outlook, I would say the Q4 performance would be a benchmark for the next 4 quarters as well. So our expectation is that we are probably talking about revenue in the region of about $200 million for the full year, and profit, which is, of course, after tax is at $50 million, so you could say around $60 million. And for the time being, we are not planning any capex in Zambia, because various other things need to be sorted out. The principal issue being, payment performance, which has been lagging behind for some time, but we have had some positive development there as well. So we expect all things being done to take any decision for capital expenditure in 2019. And coming back to your second question, the healthcare-enabled service is actually being operated through a step-down subsidiary, and it has, again, SPVs located in Singapore as well as in Malaysia. Initial work comprises, creating awareness of this product, although it is widely prevalent in the medical field, in the general public and all. That awareness program has been going on, and I'm glad to say that it's been received very well by the community in Singapore. And in Malaysia, of course, it's been there for some time, and what is unique for this proposition is that this company will have exclusive distribution rights in Malaysia from this Danish company. So our efforts would be to see that the product information is widely disseminated amongst medical fraternity, and also general public through corporate intervention and all. A lot of positive feedback has come in, and we expect that to really result in revenues going forward from probably 1920. That is FY20.
How will be the sharing of profits, sir? We are doing the effort, effort of marketing in both the countries. How is the sharing arrangement?
See, we own 65% at the principal holding company in Singapore.
Yes, sir.
So that 65% accrues to us.
So lastly, sir, congrats for CIA Sustainable Award, and congrats to you for taking CSR in a positive way. But my observation for the Torisa plant, the chrome is working 24/7, and you have the Chinese orders as well as Indian orders. Any capex on that side, sir?
No further capex other than ongoing capex requirement. There is no other capex.
No, but that CNG being used as an alternate fuel for that, because you don't have any linkage, only e-coal offer is there. So in that CNG based blasting and all, anything is there?
No, this is for actually drying up the briquettes and all. I mean, we use instead of oil LPG. So that's the change there. But that's been well received by Tata Steel incidentally, and they in fact want us to, want that kind of experiment being done by other conversion partners as well. And coming back to the sustainability award, that of course is pertaining to our Telangana works and all in general. It's been a core of the company. CSR.
Keep it up, sir. Good luck. Thank you.
Thank you.
Thank you. The next question is from the line of Siddharth Shah from MK Ventures. Please go ahead.
Yeah, sir. Congratulations on great set of numbers, sir.
Thank you.
Also, just want to check what kind of availability we are running at the Zambia plant for April and June for the current quarter, sir. And can we expect a repeat of a performance like we saw in Q4?
I don't see any reason why we shouldn't, because the availability has been at the full load for both the units, excepting for minor, overalls and all. Otherwise, the availability declaration has been at full capacity.
Sure. And, sir, also if you can tell us about the receivables position in Zambia, how it has changed over the last quarter, and what is the update till now in this quarter?
On the receivables, as I told earlier, we have been getting monthly certain payment through an escrow mechanism that's been continuing without any interruption. And on top of it, whenever we require bulk payments and all, the government of Zambia has been putting that fund across to the local utility to pay us. We, of course, have to have a solution in terms of how the monthly payments occur going forward. On that, also, a lot of positive developments have taken place where the government has engaged with the local utility to come up with a payment plan with the support from themselves. So that plan would, I think, kick in about 3 months' time. Pending that, we would expect the government to clear all our outstandings by helping the local utility through a one-off loan, which is where we are. And once that is done, probably we don't have an issue on receivables front.
Sure, sir. So the receivables amount, once this is cleared, what is the steady state receivables amount we expect in Zambia? Would that be a 1 month receivable or something?
It's actually 60-day credit. So anytime you can say 2 months receivables will be outstanding.
So something like 40 million is what we expect.
Yeah.
Yeah, so there could be a possible reduction from 80 million to 40 million over next two quarters.
Yes.
Sure. And also, sir, if you can just tell us about the gross and the net debt level at the consolidated level right now, sir.
Yeah. As far as Zambia is concerned, the debt is 500 million, as I told you.
That is gross.
That is gross.
Okay.
And they also have cash balance in their accounts, please. Yeah, their cash balance currently stands at about 34 million. But do remember, once this cash balance is slightly, it is earmarked for specific purposes. So one of the specific purposes is to keep the debt into the system. So you could take that as debt minus this cash balance. And
sure.
As far as Indian operations are concerned, 1 second.
Yeah.
Yeah. As far as Indian operations are concerned, the debt stands at 334 crores and the cash balance is about 57 crores. So net debt is 277 crores.
This is both standalone as well as the subsidiary, NBL. This is inclusive of both? This is standalone. Sorry, this is only standalone?
It is standalone, yes. And
how about the debt?
NBL, the debt is about 190 crores, 94 crores.
Okay.
That's about it. Cash is, of course, there. About 30 crores cash. Yeah. So 160 crores is the net debt in NBEEL.
Okay, sure, sir. And lastly, on the capex, what kind of capex guidance do we have for FY19 and 20 and at a console level?
FY19, there is no major capex plan that is being undertaken at this point, either in the company or any of the subsidiaries. other than the development expenditure that we briefly talked about, so probably around $3 million for the overseas operations. And in terms of domestic operations, normal capex adds to about 30 crores.
Sure. So, any net debt guidance for end of FY19? I mean, because the businesses are generating significant cash.
Well, our repayment in India is about 50 crores.
Okay. And 60 million in Zambia.
Yeah, 50. And what about NBVENTURES? One sec.
Yeah.
Yeah. Okay. Between in Ventures and NBVENTURES, the repayment is about 171 crores.
Okay. Okay.
So
and
that we could at the time the
sure. And lastly, sir, on the monetization plans, anything we have in plan for the 60 megawatt which is idled in Odisha? Anything which is moving right now?
Nothing that we can report at this point, but I think the firmness in merchant power rates is giving us some positive feedback. So we'll see one. We want to see whether we can operationalize that plant soon first.
Okay.
Talk about monetizing.
Okay.
And the current firmness in merchant power rates seem to provide that opportunity. We have some grid connectivity issues which need to be sorted out, which have come up recently on metering side and all.
Okay.
Once those are out, I think we are in a better position to operationalize that. And then the effort to monetize this 60 as well as 20 megawatt will continue.
Sure. So great, sir. That's all from my side. Congratulations once again for a great set of numbers, sir.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Sir, two clarifications, sir. So have you received this entire penalty amount of 27 crore and 35 crore respectively?
Yes, this was accounted on receipt basis.
Okay. And sir, in this particular quarter, we have shown a bit in the mining, which is a negative number. So what is the reason for the same, and can we expect it to change to a positive number going forward? And does it mean that to add to the profit from Q1 FY19 onwards?
Yeah, see, the mining, as I briefly dwelt on, there were some new pits which were developed by the Zambian company. So there is a development expenditure which is captured. A part of the development expenditure is booked in the mining division without the corresponding coal output. Because the initial phase will be a lot of overburden happens. That accounted for that, a bit difference. But on a yearly basis, we expect mining division also to do reasonably well. Though I would like to say this, high-grade coal sales are currently being planned at around 300,000 tons per annum. And our priority is to use the coal for power, in a sort of blending requirement and all. So our focus remains on, keeping a high availability, high degree of power generation, and use the fuel for that purpose primarily, while coal sales will come secondary. But mining division will get benefit in terms of transfer price and usage of thermal grade coal by the power.
So what will the cost of production for our coal and, coal at the mines, and what will be the transfer price realization?
I don't think we can divulge all those details on this call.
Yes, I'm just asking, sir, will it add to the profit,
Yeah. They add to the profit, yes.
Because they have a negative contribution in this particular quarter.
It's suffice it to say it adds to the profit, yes.
And sir, how is the Ferrora operation looking in Q1 FY19 compared to Q4, FY17? Q4 FY18. So has the outlook is more upbeat compared to last quarter?
I would say it's about the same as last quarter, but you do remember there has been a correction in manganese alloy prices in the last 1 month. Though we have had some old contracts being continued through the quarter, as well as, have, war tied up with the old rates. Now, what is going to happen is both the silicomanganese prices as well as manganese ore prices are being corrected. The effect of that will be felt in Q2 onwards. But Q1, I would say, will be more or less same as Q4 of last year.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Ravi Purohit from Securities Investment Private Limited. Please go ahead.
Hi, thanks for taking my questions and congratulations on great set of numbers, sir. So a couple of follow-ups. One was, I think, one of the participants asked about the, getting the money, back to India in the sense, let's say, the Zambian subsidiary starts paying dividends, for example. You mentioned that it will attract the, same tax rate in India, in the sense, what is the normal tax rate for other operations. But if you actually end up paying it as dividend, so you receive dividend in Singapore and then you pay a dividend here, then there will be no dual taxation, right? So is that something that the management is kind of, looking at? Because otherwise you'll end up paying like, tax on dividends that you're receiving from that subsidiary.
It's like this, Ravi. See, Zambian company, let's say it pays dividend to Singapore company. The Singapore company doesn't suffer a tax because dividend on overseas investments is tax-free.
Okay.
But Singapore company, when it declares dividend and sends the money, the dividend back to India, it attracts as a normal income.
Okay.
Okay, and we have, of course, an advantage in the sense we have mass credit entitlement, which we can effectively use for that normal income.
Okay. But isn't the law says that, if the subsidiary company pays dividend to the parent company and if the parent company pays it out as a dividend, then there is no dual taxation. So if you announce a dividend,
that is
the NBVENTURES.
That is for Indian companies.
Okay. Okay, not for an overseas subsidiary, is it?
No, not for overseas. Indian companies, yes, you're right. That is it.
Okay. And sir, in the sense, I kind of missed the point whether, we had any rollovers for our, NBEL and NBVENTURES surplus power capacity in terms of with the state electricity boards, any short-term contracts rolled over or, what's the situation there, or we are kind of participating in the merchant market, spot market?
We have been participating in spot market last couple of months where the prices are pretty robust. The expectation is that short-term tenders will be coming up in the next 1 month or so from the local distribution company. That probably would go on till April next year.
Okay.
We could participate in that.
Okay. But as of now, we don't have any contracts. The last one which ended in April, there is no continuance of any contracts next.
Correct. Since April, we've been selling on spot market.
Okay. And so last question is, actually two questions. One is, so we are not really going ahead with the second phase of Mamba, right, of 300 megawatt. That's planned shelved as of now?
Yep.
Okay. And the last question was, was on, this, the net debt situation that you mentioned. You said we have about 277 crores of, I think the Zambia was clear. I think you said $500 million was the debt.
Yeah.
And we had about some...
34 million.
Sorry, how much?
34 million.
34 million of cash.
That's right.
So net debt was about $460 million. India operations, I actually missed the numbers. So can you just, NBVENTURES as a standalone company has some 270 odd crores debt?
No, the NBVL debt is, total debt, including working capital as of March is 334 crores.
Okay.
and a cash of 57 crores.
Okay.
Making it net debt of 277 crores.
Right. That is for NBVL.
Correct.
And NBVL has...
NBEAL, which is subsidiary, the debt is about 194 crores, 195 crores.
Okay.
And the cash is about 31 crores.
Okay. So that's about 160 crores of net debt.
That's right.
So between these two, we have about 430 crores of net debt.
That's right.
So this number can reduce by half in FY19 if our ferroalloy is...
By about 176.
176 crores is how it will reduce.
That's right.
Oh, okay. And so just one last question on the dividend policy. So what is there any stated dividend policy that we follow in the sense, I mean, our profits are fairly high this year, but we've paid only 1.5 rupees per share. So I just wanted to kind of, understand if we have any stated dividend policy which, because as over the years, I think, given our outlook for the current year, profits are expected to be much higher. So any dividend policy that we have as a company, or how does it work in the sense at the board level?
We haven't set out a dividend policy as a document, but if you see, our dividend payout has been hovering around 20% of the PAT, including whatever dividend distribution tax. I think current distribution also, pans around that. Of course, there are occasions when profit level was much lower, then the payout would be a little higher. But on an average, we've been pursuing a 20% payout.
So now the question is 20% on standalone numbers or 20% of console numbers?
Standalone numbers, obviously.
So that's the question.
Standalone, yes.
So so if you are saying once in...
let's say there is some interest accretion, income accretion from overseas companies, obviously they form part of standalone numbers.
Yeah, but once they start paying, then you could consider making it on a console basis.
Well, let's leave that out. Anyway, we have to come up with a document.
Okay. Sure. Thanks a lot and all the best for the future.
Thank you.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. And now in the conference, over to Ms. Abhineet Anand for closing comments. Thank you, and over to you, sir.
Yeah, I would like to thank the management of Nava Bharat for giving us this opportunity to hold the call, and all the participants who were present. Thanks, everyone.
Thank you very much for your participation. We hope we have addressed all the inquiries adequately. If there are any other unanswered questions, please come back to us. We would get the answers on the wider platform. Thank you.